Welcome to the Explainer. So, the newly released June 2026 jobs report, it's definitely not your standard data release. Honestly, it's more like a massive economic puzzle that we're going to have to solve together. We're looking at missing workers, unexpected job losses in sectors that should be booming, and numbers that literally seem to fight against each other. So, let's get right into it and solve this mystery. Okay, let's dive into this. Here's the core mystery we're unpacking today. How exactly does unemployment fall when hiring totally stalls? Right off the bat, this data seems completely contradictory. I mean, normally, if hiring drops off a cliff, you'd expect the unemployment rate to shoot straight up, right? But that's not what happened here in June 2026. The data is telling us two completely different stories at the exact same time, and we're going to figure out exactly why.
Section 1. The headline paradox. To crack any mystery, we've got to look at the top-line facts first.
And here is the stark contrast that absolutely shocked the markets. Forecasters widely expected the U.S. economy to add about 110,000 jobs in June, which would normally point to a pretty robust, steady labor market. But the actual job growth? Just 57,000. I mean, the experts didn't just miss the mark here, they were practically in a different zip code. This signals a major, completely unexpected slowdown after several months of steady gains.
But wait. Here is the second half of the paradox. Despite that huge hiring miss, we added barely half the jobs everyone expected, the unemployment rate actually dropped. It went from 4.3% in May down to 4.2% in June. So, the crucial point we're looking at is we added significantly fewer jobs, yet somehow a smaller percentage of the population is technically unemployed.
And we really have to remember, this isn't just some weird one-month statistical blip. The Bureau of Labor Statistics routinely revises past data, and those revisions are showing a really clear cooling trend. Both April and May were revised down by tens of thousands of jobs. Just looking at May alone, it was revised down from 172,000 to 129,000. So this tells us the labor market has actually been slowing down way more than we initially thought over the entire spring. Moving on to Section 2, Sector Winners and Losers. Let's look for clues hidden inside specific industries to find out where the jobs are actually going. Now, what's really interesting about this slide is how incredibly narrow hiring has become. It's focused in just a handful of sectors right now. Healthcare was a major winner, adding 46,600 jobs. Professional and business services also had a really solid month, bringing in 36,000. But then there's leisure and hospitality. They didn't just stall, they actively lost 61,000 jobs.
And this brings us to what we can call the World Cup paradox. The loss in hospitality is honestly shocking. Goldman Sachs and other forecasters fully expected a 40,000 job bump in this sector. Why? Well, because we're right before the busy summer season and the U.S. is hosting the World Cup. This was supposed to drive massive tourism. But instead of gaining 40,000 jobs, the sector lost 61,000. It's a massive slump that totally defied everyone's expectations. No one saw it coming.
Now contrast that massive hospitality loss with the AI build-out boom. Non-residential construction actually added 17,000 jobs in June. And according to an analysis by RBC Economics, this is being heavily driven by the massive infrastructure needed for artificial intelligence. Think about that for a second. Tech trends are quite literally building jobs in the physical world. It's creating this huge surge in commercial construction, even as the residential side of construction struggles. Neela Richardson, who is the chief economist at ADP, really anchors this whole sector analysis perfectly. She notes, quote, "The pace of hiring is telling a story of both supply and demand. For now, the overall effect is a slowdown in job creation." What she's doing here is translating all this complex supply and demand data into plain English for us. Basically, it's taking people longer to find work, and certain industries are facing real, tangible labor supply constraints.
Okay, Section 3, the labor force exodus. We are now going to solve the biggest mystery of all. Why on earth the unemployment rate went down while hiring stalled out?
720,000. Let me just repeat that number for dramatic effect. 720,000. That is exactly how many people completely left the workforce in the month of June. They didn't just lose a job, they stopped looking entirely. They just checked out. And this mass exit completely explains the math behind our headline paradox. Let's look at the labor force participation rate.
By definition, this is the percentage of the civilian working age population that is either employed or actively looking for work. Well, that rate dropped by 0.3 percentage points to 61.5% in June. That's its lowest level since March 2021. So because these 720,000 people are no longer actively looking for work, they are mathematically removed from the unemployment calculation. And that is exactly what forced the headline unemployment rate down.
So you're probably asking, why are people leaving the workforce in such massive numbers? Connecting the data points gives us a few really clear, plain English reasons. First, there's a weave of older workers finally taking their retirements. Second, you have discouraged workers who are just giving up the search. And third, a recent Conference Board survey showed that the sentiment among consumers that jobs are hard to get jumped by a staggering 22.5%. That right there is the real human element behind the shrinking workforce.
Just to add a bit more nuance to this, we can look at the U6 unemployment rate. This is the broadest measure of unemployment we have. It includes those discouraged workers we just talked about, and people working part-time because they literally can't find full-time hours. Well, even this broad measure fell, dropping from 8.1% to 7.9%, which confirms that we are looking at a true, genuine exodus from the labor market, not just a statistical glitch in the headline numbers.
Moving to Section 4, Wages, Inflation, and the Fed. Let's zoom out to the macroeconomic picture and see what this all means for your wallet. Right now, average hourly earnings growth is holding steady at 3.5% over the year. But on the flip side, consumer price inflation is sitting at 4.2%. So what does that mean? While wage growth is holding steady at 0.3% month over month, American paychecks are still slightly underwater compared to inflation. Your pay is going up, sure, but the cost of living is going up just a little bit faster. But hey, there is a silver lining here, at least for the folks setting policy. According to an RBC economics analysis, slowing payroll growth actually quells demand-driven inflation fears. I know it sounds counterintuitive, but a cooling job market is exactly what the Federal Reserve wants to see right now. It prevents the economy from overheating, which is absolutely the key to eventually bringing that 4.2% inflation number back down to earth. And just look at how Wall Street reacted to this supposedly bad jobs news. The market actually treated it as a sign of economic stability. The S&P 500 and the NASDAQ jumped 0.6%, the Dow Jones rose 0.8%, and gold, which you know is a traditional safe haven asset, it surged 2%. Investors are clearly seeing this cooling labor market as a sign that the Fed's strategy might actually be working. Which brings us to our final question. With a cooling labor market, this huge exodus of workers, and an inflation tightrope to walk, what happens next? Will the Federal Reserve finally cut interest rates to stimulate growth? Or is a rate hike still on the table for 2026 to fight that 4.2% inflation? Honestly, this jobs report threads the needle so perfectly, it leaves us all on the edge of our seats, eager to track the Fed's next economic move. Thank you so much for joining me on this explainer. I really hope this helped clear up the June jobs report mystery for you. Keep learning, and I will catch you next time.